When nobody wanted gold and silver, it was easy to suppress the price of gold. Now it becomes a very dangerous game where the Bank of International Settlements, which is the central bank, the most influential bank on the planet, reclassified gold as the world's only other tier one reserve asset, in essence. And so since the end of World War II, there's been one tier one, US dollars and treasuries. Gold was always a tier three asset.
In a recent interview, Andy Schectman, the CEO of Miles Franklin, elucidated the reasons behind the necessity of owning gold. Gold has recently been the main instrument of political revolt against the U.S.-dominated financial order. The dominance of the U.S. dollar is increasingly being challenged by gold and digital currencies, as well as the growing trend to trade in national currencies. In the realm of international settlements, which encompasses the central bank or the central financial institution wielding the greatest influence globally, a noteworthy action took place. Gold was reclassified as the sole additional Tier 1 reserve asset on the planet. After 3 straight months of net sales, central banks globally became net buyers of gold again in June. According to the most recent data compiled by the World Gold Council on net, central banks bought 55 tons of gold in June as the Central Bank of Turkey switched from selling back to buying. Gibson's paradox is based on an economic observation made by British economist Alfred Herbert Gibson regarding the positive correlation between interest rates and wholesale price levels. According to Schectman, Gibson's paradox in economic theory underscores the inverse correlation between real interest rates and the price of gold. COMEX gold prices edged down to the lowest since early July, as traders weighed prospects for the Federal Reserve to keep monetary policy tight, amid the backdrop of a hotter-than-expected U.S. retail sales data. Let's direct our attention towards the video. Before we proceed, make sure to subscribe to the channel and hit the bell icon for more updates.
When you look at gold that has been acquired by the banks pretty much nonstop since 2017, there's no coincidence to me that last year or the last 15 months, they've bought more than at any time in history. This, to me, is the underlining why, is that gold is wealth, gold is money, and gold is viewed that way by the most influential players on the planet. They use the Western suppression of COMEX in order to run cover for their acquisition. If I want to buy a COMEX contract, which is 100 ounces, to hedge my position in my warehouse, I only need $7,000 or thereabouts in my margin account, and I control nearly 200,000 worth of gold. If I am a commercial bank or a central bank with 500 million in my margin account, I control 15 billion worth of gold on COMEX. I can create any perception of reality I want. And that is exactly what has happened for a very long time. There's a term in economics called Gibson's paradox, which speaks to the inverse relationship between real interest rates, which have been horrible, and the price of gold. And if you are going to maintain super low manipulated interest rates to create a perception or an illusion of prosperity like we did for so long, then you have to step on the canary in the mine shaft, and that was the price of gold. And yet all of a sudden, the most influential, well-funded banks on the planet are not only buying it at levels we had never seen before, but they were repatriating it from the exchanges and the Western central banks. So to me, on a very, very, very basic level, that's why people need to own it, because the most influential, well-funded, well-informed traders on the globe say one thing and are doing the other and accumulating it as if it is really important. So on a very generic, basic level, that's how I would answer it, that the biggest money in the world says you should own it by their actions, less by their words, and they're using manipulated price to run cover for their de-dollarization and their acquisition. That's why you need to own it. Kristalina Georgieva, the head of the IMF, 2 things she said recently that very much stood out to me. 1, a central bank digital currency that is not pegged to something or backed by something is just fiat. What is the only other tier 1 reserve? Gold. Who's been buying all of it? The central banks. So to me, if the West is going to do anything to stand up against this, their central bank digital currency must be tied to gold.
Since the conclusion of World War II, the dollar has held the esteemed position of being the world's primary reserve currency, enjoying widespread adoption for international trade. As World War II came to an end, the United States possessed a remarkable 75% share of the global monetary gold reserves. During this period, the dollar uniquely retained a direct backing by gold, setting it apart as the lone currency to maintain such a connection. In 1974, a pivotal moment unfolded as Henry Kissinger masterminded a landmark agreement with Saudi Arabia, profoundly influencing the course of global finance. During 2022, Saudi Arabia contemplated a significant shift in its approach by considering the acceptance of the Chinese yuan instead of the US dollar for its oil sales to China. According to Schectman, the importance rests in the yuan's prompt ability to be converted into gold, notably facilitated through the mechanisms of the Shanghai Gold Exchange.
At the end of World War II, the dollar took over as the world reserve currency. It was backed by gold. It took over for the pound sterling. And it was that way until right around the end of the Vietnam War, when de Gaulle from France realized that we were printing more money than we had gold behind it to fund our war effort, and he sent warships over to New York Harbor filled with dollars and said, give us our gold. We did, and Nixon made the unconventional step at that point in August of 71, and the anniversary was just a couple days ago, of closing the gold window. It might even just been yesterday, the 15th, I think, where he closed the gold window, went back on our promise to the world. We were completely fiat at that point. And even though it was supposed to be temporary, that gold window never opened back up, where governments could exchange their dollars always at a fixed rate of $35 an ounce for an ounce of gold. Well, 3 years later, Kissinger made that deal with the Saudi kingdom, and now OPEC and Saudi Arabia, and OPEC by extension, denominated oil globally in dollars for the last 50 years. This has created a massive synthetic demand for the dollar. Now you have Saudi Arabia, in essence, in bed with two of the three largest nuclear arsenals in the world, and striking deals with all of these countries, in particular China, to sell their oil for yuan, which again is what? Immediately convertible into gold on the Shanghai Gold Exchange. But what is gold? The only other tier one. Look at the export records and the import records of gold. Saudi Arabia is near the top of those countries buying gold, right there with China, right there with India. They're also at the top of the countries that are no longer buying our treasuries. In fact, they are offloading them. I had a long talk with Jim Rickards the other day, and he talked about his belief of how the BRICS will issue a gold-backed currency. And his belief, this is a guy who was hired by the CIA to conduct simulated financial war games. How can a country destroy us financially? So he thinks this way. He said, if I were the BRICS, and this is what I believe they will do, is they will peg each brick unit to an ounce of gold, period. And the West will destroy themselves. BRICS have to do nothing. I said, what do you mean, Jim? He says, well, the West has all of this debt that they have to somehow finance. They'll inflate, like they always do. Inflation goes up, dollar goes down, gold goes up, BRICS win. If they try to buy gold and compete with the rest of the world, gold goes up, dollar goes down, BRICS win. So that's what he says. Gold will have a role in whatever comes next.
Gold is becoming increasingly important as a hedge against inflation and a way to protect against the risks of the US-dominated financial system. The trend of central banks buying gold is likely to continue, and the price of gold is likely to rise in the years to come. Rising US interest rates increase the opportunity cost of holding gold. Rupert Rolling, a market analyst at Kinesis Money, said in a note, the main factor slowing gold's decline is the lack of confidence in the health of the global economy, with the latest data out of China adding to that negative sentiment. This concludes our discussion for today. We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.